Happy Monday, everybody. I hope you had a great weekend and a great holiday last week. Today is November 27, 2022, and this is your Monday market update. I'll begin with an apology for missing the Friday planning video last week. As I mentioned in the videos before that, I wasn't sure it'd be able to be completed. As you can see, I'm traveling out of town, and the holiday, I was not able to get the video done and through compliance in the short amount of time available. Friday planning video will return this Friday. Last week was a pretty typical 2022 week, Thanksgiving week, but as always, never a dull moment. Overall, the indices were positive in the holiday shortened week. For a change, we saw the energy sector was down on the week about 4%, tracking oil prices down about 10% over the past month on demand concerns that were too much to offset even the supply constraints and the upcoming deadline for oil price cap of the EU. Nearly all the S&P 500 has reported earnings, and it appears that earnings growth for the quarter will be disappointing but not surprising, just shy of 3%. Bunch of earnings this week also, but as I mentioned, most companies have reported. Let's jump in, see how the week played out. Stocks opened slightly lower on Monday following COVID news from China, the first COVID deaths in 6 months and cases on the rise. Thoughts about the easing of COVID restrictions are getting harder to believe. Big news of the day is Disney and the return of Bob Iger at the helm, but that did not take the top slot as the Wall Street Journal reported that OPEC was planning on a 500,000 barrel a day increase in production, and that took down prices. Saudis denied that rumor, and the upcoming oil embargo from the EU may take oil off the market per Russia, so it took oil back to flat for the day. Then Fed heads Mester and Daly, they both spoke dovish, and the market came back to close to even. Overall, the S&P was down about 1/3 of 1%, the Dow was down slightly, and the NASDAQ was down about 1%. Tuesday, we saw stocks open slightly higher as the trading floors began to thin out. Very little news, a bit of Eurozone eco news. Mester spoke again, but nothing new, and the news pretty much dried up. Big day of eco news ahead on holiday Wednesday kept things quiet. S&P and NASDAQ each up about 1 1/3%, Dow up a bit over 1%. Also, quiet trading, light volume, don't read too much into it. The markets opened mostly flat Wednesday and then moved higher later in the morning as it digested disappointing eco news. That was the bad news is good news thing. Inflation expectations were coming down a bit in the short term, so that added a bit to the fire, and the markets were stalled until the Fed minutes and the notable comments from the majority of Fed heads in the minutes that they'd support a slowdown in the pace of increases. This is factored in, but it still causes buying in a short-term, low-volume trading day. There was a close about the 4,007 above the 4,007 level, but since September, it was the best since September, and it was set the stage for some possible future upside in the short term. Thursday, of course, was Thanksgiving. Stock markets were closed for everyone to indulge in turkey and football. Friday was a short day for the markets and a quiet one. As I've mentioned in the past, Yom Kippur and the Friday after Thanksgiving, the two slowest days in most years for trading volume. Stocks did finish the day mixed, with the Dow positive by about 1/2 of 1%, S&P down very slightly, and the NASDAQ down about 1/2 of 1% also. They all ended the week higher. For the week, the Dow was up 1 3/4%, S&P up 1.5%, the NASDAQ was up about 3/4 of 1% for the week. This coming week's another big one as we come to the end of the year and into the last month of 2022. The importance of what we will see every day cannot be missed. There's a lot of news out of China, unrest and protests against COVID policy. We're just going to have to see how that plays out. We'll see a bunch of Fed heads on the tape. Watch for them. Williams, Bullard, Bowman, Cook, Logan, Barr, Evans, and even Chair Powell get into the action. That might be enough, but it's the first week of the month, and yes, that's jobs week. ADP Wednesday, along with JOLTS, jobless claims on Thursday, and then non-farm payrolls on Friday. Recall that the jobs market the need for a slowdown in this measure is a key for the Federal Reserve. Not to be left out, the data will be huge. We'll get Q3 GDP, personal income consumption, inventories, beige book, the carefully watched PCE. That is another one of the keys for the Fed. That is Thursday. Watch for that core PCE number, and we'll see if the moves from the CPI and the PPI are a trend or an outlier. A bunch of other data, but remember the signal and the noise story from a few months back. There's a lot of noise right now and not so much on the signal front. We're seeing a trend, or are we? That is the key. There are still another 4 to 5 main eco data points before the next Fed meeting, so these will probably drive the way they move. Last week we saw that the minutes were indicating a slower pace in Fed rate hikes would quote, likely be appropriate, close quote. We'll see if that happens, but note please, this is not news, or not really news. This is in line with what the markets seem to be pricing in. We'll see if there's any new news. As we come to the last month of the year, all the year-end actions will come into play very soon, so let's keep in touch. Let's be sure to act. The countdown begins, and then as we turn to 2023, we'll wipe 2022 from the front burner and turn to our goals for 2023 and beyond. Stay in touch and stay nimble. The end of the year may hold some surprises. Have a great week. We'll see you Friday.